Are investment banking hours really that bad? Well, the answer is always it depends. In my personal experience in a tier 1 investment bank in London, I had 3 different stages at which my hours differed quite significantly. At the first stage, I was an off-cycle intern for 6 months at one of the top teams in the bank, which obviously meant I was an intern, so I needed to make sure that I get the job. Second, it was a team with notoriously bad hours. And 3, that was at the very start of my career, so I didn't really know what the expectation looks like, how exactly to position myself, and how those hours are supposed to look like. There, I probably worked around 80 to 90 hours on average per week, which essentially broke down into around 15 to 17 hours on average per day. Again, sometimes Fridays were usually some shorter days where sometimes we could get off from work at about 8, 9 while still having to work on the weekend. But those were average days of 15 to 17 hours and then a few hours here and there for the weekend. That was pretty brutal. However, that actually gave me a very good opening and understanding of how investment banking life actually looks like. I still decided to stay in it, but again, I think 6 months is a very good opportunity to actually get that true representation versus just a summer period, which is usually a little bit less busy and you're probably not really treated as a true analyst at the beginning. Second stage was essentially the first year of the full-time. Again, I was already a bit more familiar with the setup and how everything worked, but still as a first-year analyst, you're usually the person who works most in the team, so it ended up being still quite busy. Me being in the first year also overlaid with a relatively smaller team since I switched the teams for my full-time and some of the people leaving at the beginning of the year, which also meant that I ended up actually having 90 plus hour weeks, which were relatively tough for the first 6 to 7 months, which actually led me to burnout and having to take a few days off. Third stage, which was also the last one for me in the investment bank, actually ended up a bit better than the first one, given already you know what you're doing a bit more. You have sometimes off-cycle interns and interns helping you out. And third, I think some of the timing also coincided with COVID, so those were relatively volatile times when we were either very busy or sometimes not busy at all, so that added some volatility as well. But again, those probably resulted in 70 to 80 hour weeks on average for me in the second year. So a bit better than my first year and probably my internship, however, not ideal in the grand scheme of things. However, that being said, this is not always the case. I have a lot of friends who are currently in investment banks who started with me and were first and second years with me and are now in their third, fourth, or fifth years, and they had a very different experience compared to mine. So the reason the answer is always it depends is because it can range on a lot of different factors, such as depends who's asking, which level are you asking about? So are you an analyst who's joining first year, second year, or are you an associate who's joining as an MBA or a VP? Because those have very different hours, but probably not to expect anything better than about 60, 70 hours a week. I think that would probably push it, but between the analyst and VP, the hours range quite a bit, especially depending on your previous experiences and what exactly you've done before. Second criteria is the place. I was based in London, but a lot of the times we worked with teams based in New York or in general in the US or Asia, where generally a lot of people were noticing that the hours are even worse than in London. Again, it depends on the specific situation, but generally on average, the hours in New York tend to be a lot longer than in London, and the churn of the analysts is usually also higher there. Third criteria is the timing, mainly the timing of the market. Depending on whether you're in the product, sector, or geographical team, you would have different cyclicalities and the timings when you're busier or when there's more of a downturn. So it really depends at which time you're joining, whether it's the time of the year or the timing more of a decade of a broader market. For instance, when I was working in banking, there was COVID, which was obviously unprecedented times, and like everyone else, we weren't entirely sure how the market would look like. So there were times that were very busy and the times that were very much slower. Fourth criteria and last one in my book is depending on who your boss is. Same teams might have very different MDs, so it really depends on who you're working with and who your deal team is and how they prefer to work. Because sometimes some MDs prefer to stop their day at 10 and then wake up at 4 a.m. and start reviewing things. So you might have busier mornings and less busy nights. And some people actually prefer to work all the time. They're up until 1 a.m. They wake up at 6 and continue turning on comments, and you have to deal with it basically around the clock. Overall, I think it's worth saying that if you are interested in investment banking, you should be prepared to work anywhere between 60 to 100 hours on average per week. And you probably won't have a lot of the time on your personal life, especially in the first years of your career. But it does usually get better as you become more senior and know a lot more in terms of what you're doing. As always, thanks for watching. Hope you've enjoyed the video and stay tuned for more.